Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. And I have some exciting news for everyone today, because for the next few weeks, we're going to be doing something a little bit different with the show, putting a pause on the ongoing Becoming Buffett series we've been doing in the podcast, because on June 27th and 28th of 2017, just a few weeks from now, we're going to be having our mid-year DIY investing summit in partnership with Seeking Alpha. And it's going to be an exciting summit. We're going to have a lot of some of my favorite investors from Seeking Alpha are going to be a part of this summit, and we're going to have all kinds of topics, everything from what their favorite picks are, specific favorite investments are going forward from here, how they're shaping their portfolio for the second half of 2017, how they're hedging their portfolio in light of markets being at all-time highs, as well as how they go about identifying major trends and how do they identify companies to invest in, how do they research them, how do they make buy and sell decisions, all that stuff and more. So I hope you enjoy this preview of the DIY Investing Summit, and you can register for the summit for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com for your free registration. Well, hey, Robert, welcome to the DIY Investing Summit.
Hi there, Brian.
Do you have any specific investment right now that you currently have the highest hopes for? I know that the question may not fit your strategy super well, but I'm just curious if there's anything that you think of right now, like, hey, this is a good place to be right now.
Yeah, I do. There's a stock called USDP.
The ticker is USDP.
Yeah. Okay, and it's a midstream company. It does rail shipping, and it owns terminals. They just did a secondary offering last week, and even though that does represent a 20% dilution of their current 15 million float, they had a good reason for it. The market didn't agree for a few days, and they got knocked down 14%. So we sent out our subscribers an alert on that for where we doubled down on it, and we sold puts at they went down to like $10.95. We sold puts at $10. We got 70 cents for them, 7% between June into October. So that's it's a pretty good return, and quite a nice break even of 930. And looking at the stock today, for example, people started to sort it out, see how it was doing. It's at 11.15, and our break even's 930.
So you go ahead. Sorry. So you sold puts. And so you made that premium, but you don't actually own the company. Are you hoping that it gets put to you?
Yeah, actually I do. The stock is yielding well over 11%, 11.65, right? Because they pay $1.34 a year. So at that 9.30 type of break even, and you'd have quite a higher yield of over 14%.
Yeah. So tell me, so how
these guys, what they did, the reason they bought they issued more shares is they actually went out and bought a terminal that has a straight line to the Cushing terminal, the big huge hub for energy in Oklahoma, and they got the deal for just 2.5 its expected annual EBITDA, which, compared to the higher multiples we've seen in the midstream universe, is quite a deal. It's a pretty astute deal. And they already have a long-term contract on it. So,
wow.
It's kind of a no-brainer. So these things happen, sometimes it's kind of a gimme.
So at what point, when you see a company because you feel like this company is undervalued and a great opportunity itself, so all you've done so far is you sold cash secured puts, which means you made the premium, and it may or may not get put to you. Is there a point to where you would go ahead and just buy the stock anyway because you feel like it has good appreciation, or is that just not an approach you would ever take?
Oh yeah, no, there is that opportunity as well. It just depends on where we are in our cycle with the company. Have we already recommended it, or have we not, and so on. And
in that case, would you sell off your options to them buy it, or would you just sell more cash secured puts at a place where you feel confident that it would get put to you?
It depends. It depends on where it's sitting. We might then. What we've done before is we've started with a put, and then when we saw a good opportunity for a covered call, then we initiate the covered call position as well. We match it up.
Okay, excellent. With markets at all-time highs, do you have any preferred way you like to hedge your portfolio?
Yeah, basically we're leaning more towards puts than calls right now.
Okay.
And then also, it depends. We're looking for more. Sounds counterintuitive, but in some respects, we're going with a few of the lower beta dividend stocks as well, ones that are known to have more defensive attributes.
Right. Well, that actually sounds. How does that sound counterintuitive? I think that would be a good.
Well, because they have lower volatility and their options premiums aren't so great.
Oh, right.
Right, but then so a person might say, well, big deal. This isn't much of a premium you're getting for this, and so on. But then we remind people, well, there's three ways you can use the service. You don't if you're looking for just long-term income. We've thoroughly vetted these stocks. You could just do that, and instead of adding on the other layer of selling a covered call, perhaps. And it just varies from stock to stock.
Do you ever have many situations where you find a stock that you really like and you find yourself continuing to make the same trade on it over and over again because they keep expiring, but it's just a good one to stay with? Or is it usually a fair amount of turnover?
That can happen, and certainly has, often in the past. But then, given the current lower volatility, not currently, but as we speak, but over the past, few months or so on, it's a little bit less likely that it's as rewarding. So they're harder to find, is what I'm working my way around to say.
Well, I hope you enjoyed this brief interview preview from the DIY Investing Summit. And if you enjoyed anything about this and found any value in it, I assure you will thoroughly enjoy the full interview. And you can register for free at DIYinvestingsummit.com. That's DIYinvestingsummit.com. And free registration, and then the summit goes live on June 27th. And so look forward to seeing you there. This is Brian, and thanks for joining the family. The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.